My name is Nick Petrovich, and on behalf of J Company, I have a presentation for you, the CEO, reflecting just on what I've been able to do for the company over the last 5 years. I was appointed this role after J Company had already been in operations for 10 years. I had some pretty big shoes to fill, and really what my main goal was to be the industry leader in the market for athletic shoes. What my goals were was to meet consumer expectations, but also our investor expectations at the same time, maintaining an adequate balance between the two. What I looked to do was to continuously increase our earnings per share, our return on equity, have a good credit score, but also participate in good business practices overall so that our employees were happy there. Every year, I look to increase net revenue and profits and borrow no money whatsoever from outside sources. When I originally took this position, there was an array of companies out there offering the same product that we do. So it was up to me to figure out how we were going to rise above the competition. I started off with the focus on the employees at all levels, whether they were managers or working the lines themselves developing the product. A 3% increase in all markets, including our production facilities in North America and the Asia Pacific market, I felt was a necessary change. I fully believe that well-compensated employees produce the best products. On that note, with best products, I also made sure that we had more varieties to offer by allowing for at least 250 different variations. With our company production facilities in North America and the Asia Pacific market, I made sure to invest in brand new equipment for both facilities. There wasn't enough evidence to support putting additional funds into internet marketing with no one company standing out above the rest, and I believe that what I was doing with my employees and production model would work adequately. I also made sure that in our wholesale department that we could deliver from 3 to 4 weeks now with 1 to 2. Private level operations, I believed that an even 50-50 split on standard and superior materials would allow us to get a good blend for those who wanted a high quality line of athletic shoe, while others who were more on a budget could also afford the product as well. I went big with offering multi-year deals valued at $15 million a piece to entice JXYZ and Steph Carawat into endorsing our product. Again, going back to best practices for the employees, cafeterias on-site, childcare, ventilation and lighting and safety. Treat your employees right and they'll work for you. Like I mentioned earlier, I'm very big on not taking out a loan, so I issued 500 new shares for the company so that we could have roughly $15,000 in capital to carry over for the following year. As you can see, my strategy worked out quite well. We were able to meet or exceed expectations across all levels, and I'm very pleased with how my first year decision making process went. I was very meticulous with how I made my decisions, as I did not want to over exceed investor expectation, which would then take away from my focus on my employees by pouring more money into what we were producing rather than the people that were working for us. Going into my second year, I made some continued changes. I increased wages again up to 6% across all levels. I focused more on superior materials than to your standard materials with a 3-to-1 ratio, roughly producing our products with 75% superior materials and 25% standard materials. I invested in equipment for our footwear production, so that way we could save more money by producing the exact same product. I offered to opt free shipping to all of our markets. I didn't make any changes in the wholesale market. Private label operations, as you can see again, with the emphasis on standard materials depreciating and superior materials going up. I continued the good practices across the board and then also retained our celebrity endorsement and slowly bought back some stock to retain more capital and make the value of the company increase. Once again, I met or exceeded investors' expectations, again, taking the cautious route of showing that we are an industry leader. At year 12, we were currently number 1 in the industry across the board with everything that we had to offer in terms of earning per share, return on our equity, credit rating, and image rating. And I'm really proud of that. We're doing quite a good job. And you can see from our other measures that everything was positive and increasing as well. Going into year 13, 2 years in a row, we were the number one company in the market. So I stuck to what was working. If it wasn't broke, don't fix it. Wages were increased by 9% across all levels. This time, to pair with our more models, we also were able to enhance styling features from 10 options to 40. Other than that, continued to do what I was doing across the board and slowly bought back more stock again to increase the value of the company and retain more capital. Cautious but efficient. For 3 years in a row, we came up on top. Everything was looking good. Investors were happy. Employees were happy. Credit rating was immaculate. Image rating is improving. Net revenues continue to grow up. Profit and cash retained. I really feel like we are making an impact in this industry and could potentially be number one for quite some time. So after my third year as the strategic manager, all of a sudden we weren't the number one company in the industry anymore. We were down to number two. A contender came out of nowhere and blew our numbers away. For me, I wanted to be number one. So I decided to change strategies and do a shift. A lot of money was poured into marketing. I drastically increased our prices close to $100 in retail price across the board for all markets. I took away free shipping and also kicked out delivery time from 1 to 2 weeks up to 3 to 4. I did not increase wages as I felt that I had done quite a lot in my first 3 years. However, I did continue good practices. This was a very intricate dance to meet stockholders' expectations, but then also to keep my employees happy and producing. And I feel like I did a pretty good job, especially with an aggressive strategy. Not quite the numbers I was looking for. Image rating met investor expectation, and that was one of the big things that I was worried about with making so many cuts. I mean, we increased the prices, didn't offer free shipping, and now it took even longer to get the product. The return on the equity was amazing for our investors, and even the earnings per share went up as well. We didn't borrow any money, so our credit rating was still amazing, but again, not very happy with just being subpar at the image rating. Revenue very minimally went up. We didn't retain a lot of cash, but our profits, net profits, did increase by almost 30%. I didn't like the approach I took in year 4. I kind of had a snap back to reality moment and realized it's not about being number one, but it's about offering the best product and having a good image rating. So I made some changes. We went full 100% with superior materials for the shoes that we were offering. Instead of dumping all of our older models for shortages in other markets, I retained them all so that we could cover for those. Free shipping was offered again. I went back to faster delivery. And again, I continued to buy back stock because I wanted to have less stock out there so the company was more valuable. I was shocked by our performance in year 5. We weren't number one. We were still in second place in the industry. However, I'd never seen higher numbers like this from the company. In terms of investor expectation, I threw caution to the wind and said, you know what, we're going to offer the best product that we can, and we're just going to see what happens. I didn't change any of the prices in what we had to offer for our retail divisions, but offering the free shipping, focusing on superior materials really seemed to make a difference. And I have never seen numbers this high in previous years from such a dramatic increase. I am very happy with how everything went, and I stand by every decision that I made. In 5 years, we've almost doubled our net revenues and profit. Our earnings per share, return on equity, credit rating, and image rating are second to none, essentially. I mean, there's only one other person that is better than us right now, and I can live with that. With the exception of year 4, I stuck to my original strategy. I never borrowed money. I always met goals. Every year, The earnings per share was increased as well as the return on equity. We kept an amazing credit rating, and our image rating was always at the level that the investors expected. But in my 5th year, I took it 11 points higher, and that's what I'm really proud of. We're approaching $1 million in revenue. We're approaching 200,000 in net profit. Our stock itself is trading at a very high value, and I feel like in future years to come, if we have to unload stock to get money on hand to turn back into the company, the value will be through the roof and we'll be able to retain a lot of capital moving forward. All in all, I appreciate being appointed the strategic manager for J Company. Going forward into the future, I truly believe that we will retain our position and eventually be able to come out on top. Thanks for watching.